Hello traders, welcome to the weekly outlook and setups volume 187. You know what we're going to be doing in this video, having a look at the market, how it developed this week, what kind of opportunities we had, and most importantly try to throw a little bit of a forecast for what could happen in the upcoming week. But this is really hard right now because we have a lot of moving parts, we have a lot of news, we have a lot of economic news releases, we have a lot of tension, inflation, interest rates, bonds falling. We have so much stuff which makes pretty much the market unpredictable. The good thing is that we have volatility and volume. We have incredible moves, and what I spotted actually this week, I was traveling last week. I couldn't trade at all and wasn't traveling for leisure, had some very important work to do, and I just came on the charts this Wednesday and I spotted that there are some very huge moves, and I think right now, especially for swing traders, it is great, right? If you're looking to trade on the 1 minute or if you're looking to trade on a lower time frame, you get wrecked a little bit. But if you just stay on the higher time frame and just have a bigger stop loss and just take nice clear trades with following market structure, supply and demand, you are going to be crushing it. So hopefully you guys have been profitable in March. I am around break-even-ish. The first couple of weeks were pretty hard. And yeah, we have one more week to finish very strong. So let's see how this week is going to go. And of course, if you're new to this channel, I post this outlook and setups every Saturday, and once per week I'm sharing an educational piece of content or a trading setups breakdown video. Make sure you're subscribed, and without further ado, let's get into the analysis. Alright, as always, we're gonna get started with the dollar. So what we can see immediately from the weekly chart is that we're having an overall bearish week with a nice wick on the bottom, which signifies rejection coming from the bottom. And this pretty much happened on the last day. We had quite a few PMIs coming in on Friday, and pretty much this week was very busy. We got Fed, we had speeches from the ECB, we had a lot of things, and most importantly, we have another rate hike on from the Fed, right? So we're right now at 5% current interest rate, hiking it by 25 basis points. And again, what we heard from Powell is that they are pretty aggressive, which again causes big turmoil. Again, guys, we've had banks collapsing, which doesn't happen very often. So definitely something is wrong. So they said that they're potentially going to slow it down a little bit in order not to cause a financial crash. Right? But still they hiked it by 25 basis points. Also, so Australia hiked it this month as well. We have the British rates as well to 4.25%, and also the European is at 3.50. They hiked it on the 16th of March. That was, I think, the week before. So pretty much interest rates are climbing, and what is really interesting right now is that the bonds, so I'm going to show you in a bit the bond rates, that they're actually falling right now, which is not an amazing correlation. Next week, I'm really gonna focus because we don't have very huge news, right? So we don't have any. The only thing we have is a GDP on Thursday, and there was CPI on Friday, right? So we have harmonized CPI right there for the Eurozone, unemployment rate, and CPI for the US. So again, Friday is gonna be a big day, but until Friday, we gotta make sure that we catch some really good trades. So back on the charts. Again, as I told you, weekly candle looks bearish and a little bit hard to read right here. If you remember, like from the monthly time frame, we're overall bullish. We have this push, we have this pullback. So again, is the market going to continue going higher, or is it going to continue dropping lower? We don't know. Currently, we are kind of in the middle zone, so we really have to see what's going on. As we forecasted recently, like the market came in, grabbed the liquidity below this low, gave a very nice rejection, but you can see the overall monthly candle right now. If we were going to push up, then potentially this one should have continued to push up right now, yet it falls, right? So then dropping onto the daily time frame, the daily time frame is currently bearish. So again, if you remember, here we had a structure break up, there we have a structure break down. The market pulled back, lower high, making right now a nice lower low. And pretty much you can see since Thursday last week, we had 5 bearish candles to the downside. This Thursday gave us a little bit of indecision, and Friday initiated a pullback. So what I'm pretty much saying right now is that the Dixie is bearish on the daily. Why are we responding from here? Well, because we are retesting a very extreme level right here. So are you going to take it like this? Are you going to take it like this? Pretty much what you can also do is, this is the daily. You can go to the 2 days maybe. We're going to have one candle. Yep, there we go. So on the 2 daily candle, we have this beautiful pin bar that was fully engulfed, which also creates a very nice demand zone. So this is why we're currently reacting from this area. But again, keeping in mind the overall trend, which is bearish, technically, this one should just give a reaction, lower high, and then we could potentially drop lower. Okay. So currently, before I jump onto the volatile time frame, does it make sense for the dollar to fall, right? Not as much, because the interest rate right now, pretty much from the Fed, is 5%. So the question you have to ask yourself is, where are people, where are investors and traders going to put their money right now? Immediately what comes to mind is gold. Like, look at gold right now, massively trending higher. So a lot of people that were actually buying gold down there, those are the guys that are currently having a growing asset. Okay. Another interesting thing is the government bond. Is it this one? Yeah. So what we had recently, you can see at the beginning of March, we fell from, and pretty much also from here, right, from October, the bonds have been falling, and right now the bond rate of the 10-year bond for the US is 3.3%, while the interest rate is 5%. Okay, so people are probably also not gonna buy bonds right now, because if you put your money at a savings account, you might even get a better yield rather than the bonds. So which usually, like, I thought that the correlation between rates and bonds is positive, but right now we don't see it. So again, the dollar, it actually makes sense for it to go down, right? Because people are not putting their money into dollars, right? So hopefully my prediction is accurate. Let me know if you guys are fundamental guys and you get a better understanding of this. But then again, the volatile time frame broke down. We broke up right here, and currently, technically, we have this little short-term reversal on the voyage. So what I'm going to be looking for right now is to see like the volatile time frame go down in order to start shorting, because right now we have this recent bullish momentum, which, as we said, is coming in from this very strong area of demand right there. So pretty much what you can do right now, not as much. There is a little demand zone right there. The market not massively pushed up. It's currently pulling back. What I would really love to see long term is a higher high, break of that higher low, which creates a trend change, and then for us to potentially start to reverse down, right? This is my perfect outlook. But again, as long as the market right now is bullish, of course, if it keeps forming higher lows, higher highs, I'm going to keep following it until I'm wrong, right? So this is pretty much my forecast right now. It's not in a good position to be buying or selling. Potentially your best bet will be to buy if the market starts to trend up right now nicely. But again, I would expect that we can get like a nice 50% daily pullback. So I would expect one more push, or at least two more pushes to the upside, so that we can actually create this 1, 2, 3, like an ABC, and then from there potentially we can start dropping lower. So this is my forecast on the dollar. I'm overall having a bearish bias, although we're currently bullish on the voyage. So I keep following that bullish bias on the voyage until we turn bearish, when I'm going to get more confidence to actually short the market. So let's see how this overall outlook applies to the other currencies. Let's have a look at my favorite pair, Mr. Euro USD, who hasn't been going well, especially with how I trade in the past kind of few weeks and pretty much in March. Swing trading works great. We're having some success swing trading, Aussie dollar, GJ as well, US 30 also. Euro USD, very hard to read, very hard to catch some very high probability trades, even though it makes some huge moves. So let's see, just to recap, we know that the market is currently reacting from this very strong weekly zone, and we also know the fact that the market is currently has pulled back already above the 50% of the weekly leg, and we can potentially start seeing it go down. So what did I say about the Dixie? That the Dixie could potentially go down. Well, this means EU going up, which means risk on, right? And we can see it right here on the daily, right? So the market was, this piece of price action right here was very tough, right? So that goes since pretty much since March. Pushed up, pushed down, push up, push down. You can see takes out the low, takes out the high. Like first took out the low, took out the high, took out the low, and right now it took out the high, which technically makes that daily bias bullish. All right, so this is the last. This is a daily structure break, not a volatile structure break. And again, very similarly to the Dixie, EU is reacting from this extreme zone right here, which is the zone that created this higher high and then made a trend change. And usually when you have zones like this, they are very strong. And again, we had like since Monday, I mean, very nice. 3 days of nice bullishness. Thursday consolidated, and Friday gave us this very sharp push to the downside. So again, my question is,
Again, I am not 100% sure on the Dixie whether it's going to go down. It could definitely go up as well because the interest rate is high. Like the Fed has the highest interest rate, which means that the dollar should go up. Technically, euro going down, right? But again, we have this push, we have this pullback. So I'm very curious to see what is going to happen right now, just looking on the daily. But as I keep telling you always, you need 3 time frames. So to me, those are 4H, 50-minute, and then a lower time frame for an entry. And what the 4-hourly is doing right now, well, it made a bearish trend change right there. So right now on the 4-hourly time frame, we are bearish, and my major high, which is the first high, is actually going to be this one. Okay, it's not this, it's not this, it's this according to me. We can use this little base as a potential supply, and then we can also use this little guy as a potential supply. But what I think is going to happen, something similar with the Dixie, right? We have this overall pullback. So if we get any shorts early this week, I'm definitely going to be onto the short bias, pushing to the downside, making a new lower low. And then from here, I'm really going to be curious what is going to happen, because at that time, we're going to be tapping the daily equilibrium. Okay, we actually already tapped it, right? We already tagged it, and you can see the reaction 50%. There is your reaction, right? Also coming in from this little base demand right there. So very interesting. And again, I usually don't like throwing forecasts because Monday opens and it does something completely different. But for now, I am going to stick with the short bias. And at least I would like to see one more structure break, right? I would really love to see this one to break. But again, it's not about what I would love to happen. It's about what actually happens, because right now the market is bearish from this high to this low. And in order for it to turn bullish, if it starts making stuff like this, it has to break this in order to turn bullish. But again, I'm going to be following the 15-minute, and if it starts massively trending up, then I'm going to be longing. Okay. Friday, a member of my community reading with our strategy on our valid ranges, there was a beautiful short he took right there. Unfortunately, the target was only the Asian low for like a 4-hour, and then this went to a pretty big trade. On Friday, I was like, okay, it was pretty messy, right? This was the last break of structure right there. This was the last supply. And I was like, well, I would like to wait for some more momentum to really actually gauge where the market is going to go. And there is your momentum. It was way too late for me to actually take this trade. And there were a couple up and down moves. I took a loss this week from here. That's my only trade. Very low probability loss. I also created the liquidity video that is going to be incoming next week, and I pretty much showed this loss live and why it was a loss based on the liquidity concepts that I'm going to be teaching you next week. Okay, so that is currently EU. Like the 50-minute time frame right now, it's in a correction mode, right? So you can see this is where we made the trend change. You could be taking some longs. So I'm going to be waiting for Monday to open, see what's going to happen. But again, I say that currently I am short bias. So let's see what kind of setups we're gonna get. Let's have a look at Euro Yen. So as usual, I hate currently breaking down the yen pairs because they are very tricky, very tough to analyze. Still, weekly time frame on this one, very surprisingly, is still bullish. But again, we can see that we're just chopping around, right? And it's clearly failing to take out this high. We kind of tapped inside the zone. We tried to push, and right now we're massively reversing down. But technically on the weekly time frame, this is the low, this is the high, and again, this is our main range. So we are still technically bullish on the weekly. Dropping on the daily, this again is also very tough, right? Because where is your, this is, yeah, we have one here. It really depends on how you read the ranges, what is valid, what is not valid. You can say this is a break, you can say this is a break, you can say then this is a break, and then technically you have a break up if you read it like this, but you can also read it in different ways. Okay, you can say that, for example, this is still your high, this is still your low, so we're still technically bearish. Currently, like if you just follow the most recent price action, we're currently bullish after this alignment right here. So pretty tough even for me, like to say, okay, this pair is like this, but this is why I tend to focus on 4H, right? And if you go to 4H, well, it's pretty clean according to me. Yes, here we had a break of structure down, then we had an alignment up, right? You can see the market reacted and then it pushed, and then technically this was our high low formation, but the market just came in, gave a reaction, and it just blasted through it. Okay, do we have one right there? No. Okay, so yeah, this was pretty much it, and the market just blasted through it, making the 4-hourly time frame bearish, and currently this is our valid lower high. Okay, so
Similar to EU, like the current flow of this market is bearish, especially since Thursday and Friday. Like we started really bullish on Monday, Tuesday, and Wednesday, and then we accumulated a little bit like on Wednesday, and then Thursday started dropping, right? Which is fine. So this could just be a pullback on the daily in order for it to continue going down. So if this market is bearish, then of course this can be our next liquidity target. This low right here. Currently we have a very nice pullback, so I can even say if you go to a lower time frame and you start getting a nice short setups, then I would say short is potentially the best bet you can take. Okay, the question is, are we gonna go from here straight down, or are we gonna like pull back a little bit more and then align bearish and go down, or are we gonna pull back even all the way up there? I wouldn't really wait for a pullback all the way up here, because this is the first push. This push is very momentous, and when you have huge momentous pushes like this, even a 30% pullback is enough, which we already have. Okay, so 50% if it taps, it's gonna be great. But yes, this is my analysis on EJ. I am bearish bias. Let's see how it's gonna provide shorts within here. What you gotta do right now is drop to your minor time frame, look for it to align with the major time frame, and then you start taking the shorts. Next on the list are the Aussies. Let's see what is happening right here. So very fresh against his last analysis. We know that the weekly time frame here has turned bearish, precisely right there. I just changed it up a little bit. And the valid height, according to me, is still this. And of course, we have a couple of demand areas. Actually, I should say supply right now. This is one of them, because here we have a base candle that is bullish. So is it actually? Oh, okay, no. Excuse me, I thought this one is bullish. So yeah, technically there is some sort of a supply within the wicks right there. There is this little base supply as well, where I think we're actually currently reacting. So we broke down inside bar last week, inside bar this week as well. So what you know about inside bars is that they have like a mother candle high and mother candle low. And usually with the trend, like according to the trend, the respectively in this case, the bearish one should get taken because we're in a bearish market. So hopefully this one works out. On the daily time frame, it's pretty clean, because again, this is our daily lower high formation, and the market pulled back. And I want you to observe like these 2 days right there. So we came in, we formed actually like an evening star formation. So there were probably a lot of people trying to short the market like this, right? They got wrecked once, then we had a very nice spike up again, and then the Friday's candle really shows us that, okay, maybe the trend is ready to go. So getting that really nice bearish vibe on the Aussie. According to me, a little bit tough to trade, especially like intraday. The only clean setup I see here is this guy, because here on the FOH we aligned bearish, the market pulled back, lower high, and then we nicely dropped. So if you manage to catch this short, that is an absolutely beautiful trade. Then the market broke down. This is our high, then the market broke up with this massive wick. We probably had some news right there. And then this one broke. Then according to me, this is where we aligned back bearish. And what actually caused it? Well, it's this high right there. So this is currently the range we're trading. And the tricky part is that we have supply right here. And we also have like this bullish candle right there acting as supply here as well. And if you drop like a simple range like this, well, you would like to be trading around the 50%, which makes this zone higher probability. But as I keep telling you, when the momentum is big, right, and this is pretty much the first bearish alignment, and usually the first push is the strongest and it's gonna create the smallest pullback, I would be really happy if we have like a pullback towards this zone. If the 50-minute becomes bearish, then I'm gonna be looking to short the market. So pretty much I said that the Dixie is bearish overall on the daily, right? But everything else looks overall bearish. Like Euro is bearish, Aussie is bearish, so we can potentially expect that DXY to continue growing higher. So again, flow with the market, as I keep saying. Don't try to forecast too much. Oh, this is gonna go there, this is gonna go there. No, do whatever the market shows you, okay? So that's all we have right now. Bearish bias on the Aussie. Again, couple of scenarios, we can even flush from here, that's fine, or we can create a little bit of a pullback. Then here I'm going to be looking for an alignment, and pretty much those are the 2 things that I expect to happen. We can definitely have a break of structure right there, so if you get any short, that could be a great target. I just hope first thing in the morning is not that we push to the downside, because then we have to adapt, and then this is going to be our supply, so we still got to keep following the 4 hourly ranges. So that's Aussie, bearish bias. Let's check out the JPY. Oh, this is nice. Okay, so nice. Finally we're having actually a structure break right there. We had one here. The market pulled back.
towards the weekly supply right there. And very okay, so this one is finally starting to move. Actually, March, the first week of March, this one has been great. Okay, so actually I take my words back about the JPYs, right? It was chopping here for the whole December, the whole February as well, but finally in March it started picking up the steam to the downside. So hopefully you guys trading the JPY pairs have been capitalizing on some shorts. Again, you can see lower highs, lower lows. All right, it's nice here. We aligned bullish a little bit, then immediately we went back bearish. This is where we went back bearish right there. What caused it? Well, it's overall this guy. The market came in, broke down again right there. What caused this break? It's this guy. The market then pulls back to this guy, lower high, and then just massively drops. Where is the last break? It's right there. Again, market structure video. I hope you keep rewatching it. There is the last break. This is our last major lower high, and currently the market is in a pullback mode. So what you can be doing right now is dropping your FIP, potentially expecting a 50% pullback. But as the market is beautifully bearish right now, you can definitely continue to short it even without 50%. The only problem right now is that we took a very major liquidity low right there. So this low has been intact since the 20th of December, and we just took it out right now. And usually after we take out a major high like this, two things happen. We either massively expand to the downside, or we initiate like a bigger pullback that can even cause a trend change. Okay, but for now, I'm gonna be mindful that we have taken this low. But again, as long as the forward time frame is beautifully bearish like this, I'm gonna keep following the shorts. So let's see. Hopefully we can get a slightly deeper pullback on market open, right, to make the 50-minute bullish a little bit, see it align, and then we can potentially take a short. If not, first thing on Monday, you can be looking to short this market because it's heavily bearish. But again, I would like to see a little bit of a pullback. So short bias on the Aussies. Let's see how the NZDs are looking like. Let's have a quick look at the NZDs, which are pretty much the same as the Aussies, right? So just to recap, we have a break of structure up here on the weekly, break of structure down right there. And the market already gave us a little bit of a pullback, which didn't quite make it. Yeah, almost made it to the 50%. And I can say that this is enough. This is enough of a pullback. As I told you, like the first leg that causes the trend change is the strongest and usually tends to pull back to 30%. So this to me is more than enough to say, okay, we're ready to actually drop. And what I like about this pair is that we're having this overall kind of a 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5, right? So this is something that we could expect potentially. So overall, bearish outlook on the NZD. Daily time frame is not amazing, especially this little piece of price action right there, because this is where we broke the daily high. This was the major daily high, which then made this our major demand. And from here we also broke up. So again, guys, if you remember, I take wicks as breaks. So all of this to me is breaks. And then this is our major daily high low right now. Okay, but look at the wicks, like a massive wick up, massive wick up. It's very clean that it doesn't want to go up from here. Okay, and then hopefully the forward time frame is actually going to be bearish, which actually it's not, unfortunately. This happens very rarely, that the range on the daily is the same as the range on the FOIC, because this is our major daily high low on the daily, and it's also the major high low on the FOIC as well, right? Doesn't happen very often. Usually like the hourly is gonna be like up right there, and then the hourly is gonna be bearish while the daily is still bullish, and then eventually the daily also becomes bearish. But right now, yes, right now it's the same. Okay, it's the same. So right now our major high low is here, and this is where the market is going to reacting from. So unfortunately, unlike EU, unlike AU, NU is still bullish. Okay, but looking at the other pairs, we can potentially expect it to react, break, and then from here we can then potentially start looking to short. Okay, technically, if you get a long in here, if you get a really good long, you can also be looking to, yeah, I mean, you can take a long, because technically this guy is still bullish, right? Push, higher high, higher low, higher high, higher low. Can go for another higher high, although I don't think so. Okay, so let's see. But again, just keep in mind that this one is still bullish on the FOIC, is still bullish on the daily. So as long as we stay above this high right there, the probability to actually go short is a little bit low. And technically, to me, it's actually not valid. So You can go short, but you can also wait for that low to break. Very similarly to like AJ, this one massive bearish candle to the downside. The daily time frame is dropping right now, and the forward time frame is going to be pretty simple. So here we went down, we went up, chopped for a little bit, but this is overall where the last break occurred. Am I right in doing this? Yeah, valid. So here we had a break of structure up. Yeah, so this one was very tricky because it was bullish all this time, right? It tapped inside, it tapped inside, it tapped inside. So here you can use a little bit of logic and say, well, daily is bearish, and it's very clean that we failed to push up. Okay, so then if you drop to the 15 minutes, sorry, any kind of bearish alignment right there could definitely be short opportunities. Okay, so very tricky. Similar to what we have right now on NU. It's still bullish, but at the end of the day, it shifts down. Currently, this is our major lower high. The market pushed. It's already giving us like 8 hours of pullback, which is enough. And as I told you, the first leg that causes a trend change, which in this case, we have a trend change, is usually the strongest. So you can even expect a 30% pullback, which we already have. So it's going to be great to have even a deeper one and then look for the continuation down. But I can also expect that the market continues to drop on market open. So let's see, bearish bias on NJ. NU, give it some time because it's still bullish. But again, you can already start to predict, although I wouldn't advise this, that the market could turn bearish. So if we get like a nice bearish 15-minute setup, maybe the market gives you a reaction from here, pulls back, takes out Asian high or something like this, and then it aligns bearish, you can then potentially look to short the market. All right, so that's the NZDs. Looking forward for this one to turn bearish, and that's when we can definitely start trading it with more confidence. Let's have a look at USD JPY, which is like the DXY, but for the JPY pairs. We are having an overall pullback right here, and the most important part about UJ was that here we had a trend change on the weekly, and this was the level that actually caused the trend change. And again, as I told you, as long as we stay below this one, we're technically bearish on the weekly, and it's very nice to see how this one is actually holding. We had this week right there that the market nicely threw a very big wick to the upside. It took out lots of liquidity above this high right there. And then right the next week we had a very nice bearish engulfing candle, very clean. And this week we have an overall bearish candle with wicks on both sides. And this is probably because right now we are encountering some sort of demand coming in from here. So let's break down the lower time frames. Daily, yeah. As you can see, the daily formed with a very nice manipulation pattern. It consolidated for a little bit, it created this massive buy, and then it massively sold off, which is great. And right now the last break of structure is here, which means that this is our last daily supply. And on the left, yeah, of course you can say on the left we have like this overall demand. You can see we can even draw it like this because all of these three candles were engulfed by one candle. So you can take the whole zone like this. There is this low acting as liquidity within the zone, right? So we can definitely expect a bigger reaction from this area, okay? So the 40 time frame could also turn a little bit bullish, similar to the Dixie, but in this case, it's not, okay? In this case, it's not the major lower high. In this case, it's this guy right there, okay? So what we could have, of course, is a reaction. From this zone, pull back towards right there, give us a 50-minute bearish alignment, and then we can short this market. So this is pretty much my prediction right now. I'm gonna keep it simple. The only thing that worries me is that, again, we're tapping into massive demand on the left. We took massive liquidity as well, so that can give us a deeper reaction. But if this pair is gonna go down, it's gonna go down, right? So let's see. The only little detail is that, like, if we actually ignore, because again, I don't look on the left. Let's just ignore these things. What do we have right now? Even if you don't look at the daily, okay? This is what we have. Look how simple it is. Lower high, lower low. The market is bearish. Amazing. If I get a short setup on the 50-minute, I short this guy. And if we break above this zone, I'm bullish. And then again, yeah, we're going to go long until we're wrong, right? So long until we're wrong. That sounds nice. So yeah. That's it. But again, keep in mind, again, the top-down analysis. I usually do top-down analysis in order to see, okay, this is the level. This is why we're responding from this level. This is why this is happening. This is why the market made this high here and is dropping, right? This is when the hard time frames are helping to give you even a little bit more narrative, right? But focus on your main time frames. Okay, so hourly, bearish. If we get a nice tap inside this supply zone, if we get a nice 50-minute alignment, I'm going to be looking to short USDN. And of course, anything can change in what is happening right now within the world economy. So keep an open mind. Looking at USD CAD, it looks like we have 2 weeks of an overall consolidation. Why? Well, because we have a push right there on this weekly candle, then we have 2 inside candles. Okay, so this is definitely chopping around, which tells us 2 things, right? It's either accumulating for a breakout up or for a breakdown down. What is the overall bias of this market? It is bullish, right? Remember, well, it depends actually. It really depends in this case if you take this one as a break and this one as a breakdown. Because then in this case, this is bearish and the market is currently tapping into supply and it could drop. Okay, but also you can read it like this. Then you can say, 50% pullback, we're gonna take out this high. Okay, this is why every trader is unique and every trader needs to listen to his own analysis. Okay, so I'm gonna keep open to both outcomes, but what I'm gonna say is that again, currently we're chopping. And yeah, if you drop to the daily, we can clearly see it. This is like the last daily higher low. Yeah, this is definitely the last major low, major high. And since March 14th, this is where we made the push, this is where we made the pullback, and since then we have been chopping around. And volatile time frame, is it clean? Aligned bullish, this is what caused the alignment. We came in, we reacted, but then we broke it down, then we broke, wow, this one is tough. Then we broke down again here, but broke down, immediately broke it back up. Then, oh wow, I'm not gonna break down this pair. This one is way too messy. Okay, so yeah, what you can just conclude that the last break was here, and then you have this massive impulse to the upside, causing a very momentous structure break caused by this demand zone right there. So technically, right now we are in this overall daily demand. The market is still bullish. Volatile grabbed lots of liquidity. It was really consolidative. We have this very nice push right now. This is our current range. So I would say UCAT looks more bullish than it looks bearish, but again, keep in mind we are chopping around. So the best bet you can take on this one is to go long, right? The positioning for long is not great because you don't have any area on the left, right? You're not even below 50%, so it's not amazing right now. I would really appreciate if it pulls back even a little bit more, probably towards the 50%, and then it starts trending nicely on the 50-minute. That is when you can start going long. But like for me right now, although we don't have the bullish market yet. Even if it turns bullish from somewhere right there, I would be hesitant to go long because pretty much the volatile is not in a good position. So I'm gonna say that this one is overall bullish. In order for me to go long though, I would love to see it pull back a little bit more, then give me a nice alignment, and then we can definitely target the highs. Keep in mind the inside bar, it makes a little bit more sense to take out the high than to take out the low, because I can see there are some buyers entering the market. There are more buyers than there are sellers. So again, longs are a higher probability, but again, I will be needing a cleaner setup on UCAT. Let's have a look at the pound pairs. So currently we're in a very specific situation because if you remember, here we had a very miniature structure break, but it is there, right? And here we have also a structure break to the downside, which is actually a trend change. If you ask the question what caused it, it's this guy, and right now we're tapping into this weekly supply, taking in liquidity above this high right there, and we have a very nice rejection coming out of this level. So the next week looks like we can have a very nice bearish candle to form like an evening star formation, but again, we just don't know, so let's not try to forecast too hard. Daily time frame is currently bullish, I can say. Depends on whether you take this to be a break of structure and then this is your higher low, or it depends whether you think that this is your higher low. Right, so this is why I also don't do daily too much, because in order for you to do daily and weekly, you also need rules for those time frames, and I don't have them. Okay, what I just know right now is that there is a high chance we drop. Okay, so if the volatile time frame goes down, which it has, I think it's very choppy, but yeah, no. Okay, tricky. You have 2 choices once again, but if I'm really objective, this is still to me the major higher low, right? This is not to me, right? I'm not gonna say why, but according to me, it's not. So yeah, we gotta wait for this one to break in order to. This is a similar situation we have on NZUSD, right? Where we have like the same range on daily and the same range on the 4H. So
we can potentially again like try to forecast that the market could potentially go down. So if you start getting any shorts, you can start like shorting already. But let's keep in mind this demand zone right there is still intact. So on GU, I'm gonna say very simply, wow, this closed very, very nicely right there, very consolidative. So I'm gonna say that I would really love to see this one break first and then potentially short from here. Currently, it's forming this very nice kind of a flip zone, reacting from demand, forming actually a very nice potential supply. So this is what, like, this is really actually forecasting and reading it ahead in time. This is what I would really love to happen. Okay, we can maybe even pull back a little bit more and then drop. Okay, but this is essentially what I would like to see. Right, this supply zone being created right there with the creation of a trend change, and then potentially to start taking shorts on this pair. So let's see. This is how I currently look at GU. It needs a little bit more time because it's in a very specific area. As I told you, like weekly supply, reacting from it. Daily still has this overall bullish flow. So I really need to see this one to break before I really say that the 4-hourly time frame is bearish. So waiting for that. In the meantime, if you get like any shorts within right there, you can definitely play shorts. Right, because we can potentially already start expecting this can roll down. But if you want to be really technical, which you should be, wait for this one to break and then take shorts with confidence. GJ, we can probably expect that it's dropping to the downside. Yeah, this one, look at all those wicks, right? So this is what I don't like about right now, is that we're having like huge moves, but they are very, you can't really forecast them very nicely. They're very huge, like it just opens and it just runs, right? Like for example, here, that was nice. We had the supply, the market came in, massively broke down. We have a breakdown here, we have a break up here. This made this our demand zone. All right, it came in, reacted, then it broke up. That's the break. This is what caused it, push pullback. There we have another breakdown. Then we have a break up, breakdown. And yeah, the last breakdown is right there. So technically this is our supply zone. All right, so see how fast we broke this down. And yeah, so similar to all the JPY pairs, this one is also bearish right now, which again can give us a little bit of hint that GU can also potentially go down. It's already traveling towards the 50%, coming in very close to tap it, so that is great. Again, two situations on this one. You can either have like a deeper pullback, a line bearish, and then potentially to try to go short, or it can start dropping first thing on market open. So bearish bias on GJ, and overall I can see a bearish bias along the JPYs, okay? And pretty much only, I think, EU and AU are the bearish USD pairs. Those are the ones that actually really aligned bearish, but we can already try to forecast that GU and NU can also go down. So let's see how they work out. Let's have a look at gold, which looks like it's on a rampage. So this is my last forecast. Usually I keep my analysis on gold and the indices just to follow up on what I'm doing, because I'm still learning how to trade those. Again, if you remember, like the overall macro move, this very nice push, we pull back 50%, precisely 50%. We just kissed it, right? We aligned bullish on the daily. I think it was right there that we aligned bullish. And sorry, this is actually the weekly, not the daily. The daily aligned somewhere down there. And this is like the last demand zone that I drew. So I didn't do an analysis that last week. I was actually traveling, so it was impossible for me to make it. And we tapped inside, and you can see like this week right there, last week, massive engulfing candle. I mean, this is a massive engulfing candle. It's a Morobozu candle with no wicks on to the bottom and to the top. So this one has been respected. Right now we can move our major hard low to here on the weekly time frame. And yeah, we're absolutely crushing to the upside. Here I was doing the analysis. Yeah, we had a breakdown, but we were tapping into daily demand because I think the daily was bullish at that time. Yeah, so the key here is that, for example, the hard time frame will always prevail. This is where we aligned bullish on the daily. This is the daily demand zone, but the 4-hourly time frame was bearish. Okay, so we tapped into daily demand, and since then we massively expanded. Okay, so hard low, hard high, hard low, hard high. So here, let's actually see what is happening right now. So I'm gonna delete this overall analysis because it's no longer relevant. The trick here is, okay, so luckily this is not valid. So what is valid then? Yeah, this is valid. Oops, right there, overall. So this is our overall demand zone right now. So this is our major hard low formation. Actually, if you really want to be precise, it's here. So I can actually minimize this to that. All right, so this is how we're looking at gold right now. Like how I draw it, it's gonna be like hard high, hard low, hard high. This could potentially be a hard low formation, and to potentially go for the weak high.
right? So this is what we can potentially expect. This is where you should have been looking for longs, right? So when the 50-minute came in right there, you wait for it to align, you take your long trade right there, and then you smash it, and then it's all about following the flow as it goes up. Right now we have like a little bit of a correction, so it's not in a very good place to be bought or sold. This is internal, right? This is internal, so don't look at this too much, but that could be a potentially a nice base to give us a nice 50-minute bullish alignment so that we can actually go long on gold. Okay, so the thing is, if the DXY right now has that short-term bullishness, because as we spoke earlier, it has aligned bullish short-term, and like EU is bearish, AU is bearish, so there is that bullish DXY, bearish everything else. Okay, so gold might find it a little bit hard to push up, and it might give us like even a deeper pullback. Okay, so if you didn't smash it on gold, like since here, and all of these longs, right now it's slightly bit late, right? I don't want to say late because we can definitely continue to massively pump into the highs, but like looking at how exactly right now, what we have is a little bit of a kind of withdrawal to the downside. So let's see. I mean, if you get any long trades on gold, they're high probability. Why? Because every time frame is long right now, so that is where potentially like the BFIs, that's where the big guys are potentially going. So again, long is the bias. The key is this precise area right there good to be buying? Okay, is it a little bit high? Well, this was our range. Below 50% is your best bet. Right now we're above 50%. So if the market falls below 50% again, then you can look definitely for a new long trade. But again, let's see how it's going to respond from this level. This is not correct demand, by the way. This is the correct demand. This is just internal demand, right? That is also like a nice flip zone, because here it responded from supply, then it turned into demand. So if I get a bullish shift right there in the 50-minute, I will be interested to go long. But again, keep in mind that this is still your range. So if we get below 50% of that range, that is where you're going to get your highest probability long. So gold traders, let me know if you capitalize on gold, and let me know what is your outlook for next week. All right, let's have a look at some indices. Very, very, very tricky to read. I mean, it's very uncertain right now with everything that is happening, and indices are also pretty tough to trade intraday. And also like the macro is a little bit uncertain still. So US 30, again, this one on the weekly is still overall bullish, right? This is the valid low, this is the valid high, and we're still kind of in a pullback mode, so we're technically bullish. What I actually like see here is that we have a very nice push up, and then the push down is, there is no push down. It's very, very, very corrective. So again, if you just actually measure it, it took the market overall, well, yeah, you can say either 8 bars or you can say 10 bars to reach the high. And then right now the market has been pulling out for 14 bars. So it definitely looks like that the bullish momentum is prevailing. Dropping on the daily is bearish. So the daily aligned bearish here. We had a very big consolidation like before we actually caused this daily break. This is where the daily break occurred. Right now we're in a pullback mode. So we're still bearish, right? So this is still the major daily lower high, lower low, 50% pullback this week, right, on Wednesday. And right now we are, but the 40 time frame is very tough, right? So the 40 time frame is very tough right now. It's very hard to read. Yeah, this little piece of price action right there is hard. So here we technically have a break. Then this is what caused the break. And then technically right there, it aligned bearish, right? Aligned bearish. But then here you also have another break. And it broke, then it broke up, then it broke down, right? So technically the last break according to me is this, and what caused it, yeah, very, very, very tricky, this one. So you can say that it's this guy, right? So I'm gonna say that still the 40 time frame is bearish. It's very hard to trade though. It's very hard to even read the 40 time frame. It's very hard to trade on the 50-minute. Like we get consolidative Asian, consolidative London, then New York just does boom, 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 like very huge spikes. Very, very tough to trade on US 30 intraday. So I am slightly conservative with it. Not taking any trades on it right now just because it's very manipulative. It's very impulsive. There is a lot of indecision, especially with the indices. I'm very surprised they're not falling, right? They're overall conservative, like they're very neutral. So be careful, right? Be careful with the indices. Intraday, you can definitely catch like New York Stock Exchange open, taking the liquidity gap and then potentially running. You can definitely play the strategy with the indices. But when it comes to trend following right now, not a good time to be doing so. Like Nasdaq as well. So where's my analysis? Yeah, weekly time frame. Well, it keeps pushing up. It keeps pushing up. We grab the liquidity. Right now we're making another kind of a breakup. Is it a liquidity grab? Is it a break? Well, depends on the time frame you're looking at, right? If you look on the daily, it is a break, right? So we're technically bullish, and we have this little demand zone right there on the daily. So it does not make a lot of sense to me what is happening right now. We reacted from here. We're back at the supply. We're not going down. We're also not going up, right? So it's not a great time to buy stocks as well. I'm still waiting. I'm still cashed in on cash and just waiting for the drop. Hopefully it comes in because I haven't bought anything. So if you look at this guy, daily is bullish and the hourly time frame is bearish from here. Right, and this is the bearish voyage, but the daily is bullish. So to me, this one is absolutely untradeable. Like, look at the legs, look at the reaction. So it starts Tokyo, like boom, 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 then massive move up, massive move down, then boom, 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 up, down. No, right? So indices right now, guys, if you're intraday trading them, be very careful. I am not even like finding it nice to break them down because I can't just read them actually, right? The weekly here is bearish too. We're in this pullback mode. We got the liquidity. It looks like we reacted down, but it just doesn't have the conviction to push down, right? You can see S&P, like it broke down here. It broke up right there. Demand, respected, right? So then when's the next break is here. The next break is here. And right there, it's also tricky. Like if you really look carefully, we broke up and then we broke down right there, which is, I don't like when it happens with wicks like this. Right, so that broke, we came back, retested, then we broke down again, and then we broke down again. So this is the last break, and the last supply is technically this. So similar what we have on US 30. Okay, so I find that S&P and US 30 correlate, while NASDAQ is usually looking a little bit different, right? Although they're all bearish right now on voyage. Okay, so very, very, very tricky, very uncertain, right? And especially like on the 15-minute, it's very up and down. It's very manipulative, especially this week. So hopefully next week it gets a little bit cleaner. And you can see within the Fear and Greed Index, I don't like this. I was very happy to see it break below the orange line and then potentially stay below, but immediately bounced back up. Okay, so this means that it's just neutral. It oscillates between it, okay? Yes, we are in fear right now, but I don't see the fear. This is reflecting right now that the market came in from all the way up there to all the way down there. This is to me not fear. You can see it's overall neutral. Fear is gonna come in where we actually make a decrease of price, like a 5%, 10% to say, but we're not getting this yet, right? So this is not valid, according to me, right? So I'm studying this, like the timeline is usually what I like, but this is again basing it on where we were and how far we dropped. Okay, but I also like to look at this guy because again, this is fear, right? When we actually break below, we stay below, we retest from the other side and we continue dropping lower. Right now we broke above, retested from above, so it's still rather bullish. Okay, so I don't see any signs of a crash yet. I don't see the stock market going down. So patiently waiting and of course adapting with whatever happens. So for day trading right now indices, watch out. Crypto is very surprisingly massively pushing up. Like we had like this short-term pullback, and right now we're already 20k, 29k, right? So very, very, very nice. And again, I mean, hopefully some of you guys bought down there. I was very skeptical to buy. I think this was a pretty good fear level right there, 16k. All right, so right now we're all the way from 16 to maybe even 15. Yeah, all the way towards 29. So very good push. But again, for intraday, I don't like trading this intraday because this one tends to consolidate and tends to make like some very sharp moves. I like to look at it like from a daily perspective. It's at a high right now. Yes, everything is bullish. You can drop a potential demand zone. That is right there. But yes, I am not into crypto right now. It's pretty much a market that I'm not very interested in, especially when I lost like a lot of money. But again, this is my fault. So yeah, like on Ethereum, I was very curious about it to even see it go lower. But yeah, you can see Ethereum is not as strong as Bitcoin. But I think why this one is climbing, because again, if you remember, we asked the question at first, where are people putting their money right now? Running away from the dollar, going into Bitcoin, going into gold, right? So Bitcoin looks like it's this is not hedge against inflation, it's a hedge against like bank crisis and stuff. Because Bitcoin is Bitcoin, right? You put your money, you have that asset, and if you store it safely, it has its value. And right now, as more people are actually putting money into Bitcoin, the value is growing, right now. But again, it could be anytime soon we have another crash, so don't get too excited. And don't go FOMO right now, because right now it's too late to be buying. Right now the greed is very big. A lot of people think, oh, it's starting, so I'm gonna buy right there. And again, if you buy high, you know what you're gonna have. You're gonna suffer going down. So be careful. With all the uncertainty right now, my tip is to just like stay patient, right? Stay patient, evaluate, read, flow with the market, right? And of course, trade your main pairs. And let's wait for some stock market crashes anytime soon as well. So guys, I'm gonna wrap it up here. Hopefully you enjoyed it. I'm still getting into the flow. Like, I'm gonna be starting trading again full time this week. Hopefully get some very good setups. I'm gonna be publishing the educational videos from next week as well. Liquidity is ready, and also the entries is gonna be up next. And yes, hopefully you guys are gonna have a lovely weekend, and I wish you a crushing week ahead, and stay tuned for my outlook on Tuesday.